So today's session is about the entrepreneurship ecosystem of Japan. And there are very few people in the world who can, at the same time, give you the background context to really understand what's important versus what's kind of noise, and who have really the most up-to-date knowledge of anybody that anybody can have in regard to what's going on in the system right now. Our speaker today is Alan Miner, who is the chairman of Sunbridge Corporation. Alan started Sunbridge back in 1999, and that may be an interesting kind of point of departure for us today. But Alan has been either in Japan or back and forth to Japan at least since 1986-87, because he was the co-founder of Oracle Japan, Oracle subsidiary in Japan in 1987. Served not only in executive positions in Oracle Japan, but also in positions in the parent company here in the international and product divisions. In '99, after starting Sunbridge, he then went on to join the board of directors of Salesforce.com's Japan subsidiary, served on the board of Salesforce.com in Japan for 10 years. He has founded a number of companies. He started Sunbridge really, what I would say, is to build bridges between startup companies in Silicon Valley and startup companies in Japan. And maybe a good place to kind of start out is to ask you what it was like in 1999 in Japan. I remember Bit Valley, but that's kind of...
Yeah, so from about 96, 97, there was a wave of people who'd been studying at Harvard Business School or Stanford, people who had come out of top Japanese universities, joined great companies, been sent to the US to study, and in the middle of the internet bubble, when they came home, decided what they wanted to do was start an internet company, because they'd experienced the US during the internet. So people like Mikitani-san from Rakuten, Hori-san of Globus, Ishiguro-san at NetAge, and others. So there was this wave of top Japanese talent who were being groomed for executive roles in traditional economy who got the internet bug. And at the same time, there were a lot of students in undergraduate programs in Japan at the time who observed that their colleagues were struggling to figure out what they wanted to do with their lives after college. And particularly towards the end of the first lost decade of Japan, late 90s, I'm forgetting the name of the securities company that went bankrupt now. It's been so long that it's long forgotten. But there were layoffs happening in the big companies for the first time. And there was, of course, news of all the exciting things happening on the internet in the States. And so you had a wave of people like Fujita-san at CyberAgent. It's probably the most famous and successful one of the college kids starting startups. And then organizations like ETIC that were formed to place students in internship roles in small startups to expose them to alternative careers than joining a big company. So there was a lot of, and the Bit Valley movement really started largely around the students looking at doing internet things. And a gentleman named Ishikawa-san, who had worked for AOL Japan and tried to bring Amazon in Japan, so 30-something, early internet local entrepreneur, who got a group together to talk about how they could make Shibuya the center of high-tech startups in Japan. And it kind of, that movement kept gaining more and more momentum, and there were more and more college kids starting companies, joining startups through about 2000. I think February of 2000, there was a huge event at the biggest disco in Tokyo, and Son-san flew on an airplane to give a speech, and a lot of cheering. And that was kind of the last big hurrah of the Bit Valley movement as a movement. And from then on,
that was one night before the dot-com crash.
Just before the dot-com crash. A lot of enthusiastic people, but kind of as that was all going on, in classic Japanese MITI-driven industrial planning, a couple of key people within MITI had been coming to Silicon Valley from about 1996, 1997 to study the legal framework and the ecosystem framework for how startups got started and funded in Japan. And I remember being interviewed by the Kacho in charge of that a couple of times here in Silicon Valley and once or twice back in Japan, as they were developing the legal framework and the government policy agenda to get an active innovation ecosystem. So there was all this social, like, youth movement going on in Shibuya, but at the same time, MIDI was taking a very serious and proactive approach to looking at what needed to be done in Japan to facilitate an active startup ecosystem. So out of that, in about 2002 or so, you had a major revision of the commercial code. Mombu, I don't remember if MIDI pushed them or if Mombu Kagakusho, in competition with MIDI, about the same time, about a year later than that, I think, introduced a program to encourage all the universities in Japan to launch technology licensing offices and to set a goal to have 1,000 university-affiliated startups launched in Japan before the end of the decade. So there was a lot of movement on the part of the government kind of coming out of this that I think put in place a more stable, permanent underpinning for a dynamic startup ecosystem.
But yet, Japan's had this long reputation of being kind of unfriendly towards startup companies and not entrepreneurial in its whole kind of culture. Do you think that's deserved? What are the main reasons for it?
Yeah, I think one mistake we make in Silicon Valley is comparing every other community, every other startup community or country to Silicon Valley. And I think Silicon Valley is highly, highly unique on the extreme end of the startup ecosystems. And Japan may be highly unique and different on the opposite end of the spectrum. So I don't think Japan's reputation for a lack of entrepreneurship, a lack of interesting, exciting startups is undeserved. But in every generation, whether regardless of how supportive or effective the ecosystem is or is not, you've had in each generation some exceptional entrepreneurs emerge even out of that relatively unsupportive, unfriendly environment. So you have people like Yanai-san at fast retailing Uniqlo brands and Son-san from the 1980s and a number of others. In the 1990s, you have the people I mentioned who left MBA programs in the United States to start companies in Japan. Then in the 2000s, you have a handful of people who, like Namba-san from McKinsey, who started DNA. And Monix's founder, Oki-san, who was at Goldman Sachs and left to start Japan's first online discount broker. So you have in each generation, despite issues with the ecosystem, you have some exceptional entrepreneurs emerging. But I think as a society, as a country, a lot of Japan's entrepreneurial ambition, creative talent, continues to be pretty well leveraged by the large corporations. And smart, talented, ambitious people are drawn to go and apply their talents in the place where they think they can have the most impact on society in the easiest, most impactful way. And I think to a larger degree than the United States, certainly to a larger degree than Silicon Valley.
So when you say leverage, you mean actually hired, right?
Yeah, they're actually hired and developed, and I think one of the unique and interesting things about large Japanese companies is they still take a very, what we would call a conglomerate approach, I think. They're very open-minded to launching new lines of business that are out, not just the trading companies, but even industrial companies will launch lines of business that are out of what anyone would think of as their core competency because there's someone inside who wants to do it and has the talent and the ambition, and the company has the funding to support it. So you see a lot more out of the core competency innovation, I think, happening in big Japanese companies than you would in a big company in the United States. And so some of the entrepreneurial talent, I think, gets developed and leveraged there for the economy.
That's an interesting kind of insight, because I think a lot of the times what happens here is somebody has an idea inside a big company and
that's not our business.
Won't buy it,
yeah, that's not our business.
So
yeah.
You got to start your own.
And so I think the propensity in Japan, if there's someone who's talented, ambitious, who has built these relationships, big Japanese companies, I think, are more. It's not the typical pattern, but they are much more open-minded, I think, about keeping the people in the family. And if the business looks like it might be interesting and make money over the long term, they'll invest and enable people to. And so that's why you have companies like Topon that started in printing, doing RFID tag software solution, is specifically that kind of evolution. Or my favorite example of this, I don't know if I would say it was smart, but I remember an article from the Wall Street Journal in the late 1980s when Nippon Steel was struggling and going through restructuring. They launched the space amusement park in Kyushu, but in the same article announcing this big space-themed amusement park, one of the managers in Nippon Steel was going to launch a chain of flower shops. And how you go from especially steel manufacturing to a chain of flower shops, heaven couldn't guess. But the value of the relationship of the people in the institution and leveraging their creativity, giving them some room to explore and experiment and try new things. For me, the Nippon Steel flower shop chain is probably the most extreme example I can ever remember hearing about of how the value of the interpersonal relationships and leveraging entrepreneurship there.
Push this a little bit. The big companies then are able to nurture new business lines, basically keeping the same either overall company structure or at least the same business group structure.
Yeah.
So,
but I think
how come this doesn't allow for great world-leading companies, kind of, which I think is the distinctive feature of companies that come from here?
I think it might be because probably the strongest talent, the best talent, and the strongest talent in the big companies continue to fight to eventually become the CEO of the company. So the absolute best of the best in the big companies stay with the core business and pursue a career leading the core business. And probably the only example where you get a much more variety in the business of the really talented people is in the trading companies. So I look at the trading companies as historically the alternative to venture capital in Japan, because they invest in a broad variety of businesses. They recruit and retain some of the best talent. They have financial arms that have a lot of capital to invest. They're not afraid to invest. So I've thought, as I was thinking about, how is the ecosystem different there than here? Because there are plenty of creative people, plenty of ambitious entrepreneurial people in Japan. How do they express their desires and achieve their goals? And I realized at one point that probably the closest thing to a hands-on Silicon Valley venture capitalist, really engaged with the founders, really supportive over the long haul, is the trading companies, planning divisions, and finance divisions.
To make sure, how many people know what we're talking about when we talk about trading companies?
Companies like Mitsubishi, Sumitomo, Mitsui that have multiple, for some of them, hundreds of years of history, with a financial business at the core and a collection of sometimes hundreds of affiliated subsidiary companies in just as many businesses as there are companies. Yeah,
and their whole reason for existence is to make new business.
Yeah. That's their whole
new deals.
The basic business culture and the basic business philosophy is find new ways to do some good in the world and make some money while doing it.
Yeah.
And so that ecosystem of Sogo Shosha trading companies, I think, also captures a significant amount of the entrepreneurial talent in Japan. But the more directly relevant answer to that question in Silicon Valley setting is, what about the independent startup scene? The entrepreneurs that start companies, what are the differences there? And I think probably the biggest difference that makes it harder for an independent startup entrepreneur to have the kind of impact in Japan, coming out of Japan, as you see coming out of Silicon Valley or recently quite a bit out of China, is the relative sparsity of funding. So, and that impacts it in a number of ways. So just a little bit of data to help frame that gap. In the United States, typically about 50 to 80 billion, depending on the year, 50 to 80, tens of billions of dollars a year are invested in venture capital each year. In China last year, $50 billion was invested in China-based startups. A lot of it domestic, some of it coming from overseas. If you look at a list of the top funded, the most significantly funded companies in, this is a little fun doing a little bit of research for today's talk on this. The biggest funded company in the world, everyone probably knows, is Uber. What you may not know is that of the top 10, 8 of them are Chinese-based companies. So after Uber's 14, oh, nope, I'm sorry. I am possibly wrong. I've got this down as Didi in China. Uber's competitor in China has actually raised
right.
18 billion versus Uber's 14.
Wow.
And then in China, you have Mobike, Ant Finance, Sunning. You have 4 more companies that have been funded, have raised a total of $4 billion. And then you go to Singapore, where there's a company, Lazada, that raised $4 billion, and the Uber competitor there raised 3.5. You come back finally to the United States at about rank 11 with Infor out of New York and OneWeb out of Virginia, Airbnb somewhere in that range. So of the 10 most highly funded companies that are still startups, 9 of them are from China, and the other one is Uber. So, but when you get down to that level of 2.6 billion, which is the 11th company level, that is the total funding of all startups in Japan last year, which was a record-breaking year.
Yeah,
so
the total of all venture capital.
The total of all venture capital invested in Japan last year was what was spent on Infor out of New York, or Daikon, which is a basically online auto loan service in China. So one company in China, one company in New York raised as much money over its relatively short lifetime than all the money invested in Japan last year. So it gives you sort of a sense of the gap. That said, that $2.6 billion is 2.5 times what Japan has traditionally trended at. Japan's total venture capital annually has been about $1 billion a year for a long time. And it's moved up a little bit as the economy improves, as the stock market improves, and the funding for venture capital all over the world tends to trend pretty closely with how the public equity markets are doing in those countries. But the $2.6 billion invested in Japan last year is a record. I haven't seen it in the I've seen it reach $2 billion once before, but this is the first time I've seen it go significantly above $2 billion in Japan in 20 years.
So is this a blip or is this a change?
I think it's a gradual trend. I think if you look at a number of other data, for example, you look at the number of individual companies who raised $10 million in a single funding round in Japan. That number has been trending up steadily, slowly but steadily every year since 2012. I think there are about 50 companies or so last year that each raised more than $10 million in financing in Japan. And it grew from about 1.25% of all investments in Japan to about 8%. So about 8% of the startup funding in Japan now are at the level of $10 million, where 20 years ago in Silicon Valley, a $10 million funding round was a nice sizable round. You can do a lot. You can do an awful lot with $10 million, especially if all of your competitors are only being funded about that level. Now, there are a couple of other things. So we talked a little bit about big company innovation. I think one of the ways Japan is...
No, before you go too far with this, Alan.
Yeah.
So, okay, the trends toward venture capital investment is kind of steady for a long time and then sort of a sharp upswing.
I'm not sure that's so sharp. It feels a little more gradual. So it was $1 billion, $1.5 billion, $2 billion, $2 billion and a half.
Okay.
So there seems to be a steady increase, and certainly on the larger financing rounds, that's been increasing.
Yeah.
Within the last few years, we've seen the first 2 or 3 companies raise a total of, so the top 11 companies funding historically $2.6 billion. The company that has raised more money privately than any other in Japan is one of my favorites. They're called Spiber. They've raised a total of $126 million over the 10 years or so they've been in existence, and that's been enough to do. And we'll talk about them a little bit later, but they've accomplished an enormous, amazing amount on $126 million. But that's the most funded private company in Japan is at that level.
Okay.
And that's its level of the most funded company in Nebraska, the biggest funded company in New Jersey, the biggest funded company in Idaho is about the size, has raised about as much funding as the biggest funded company in Japan.
Okay. So along with increasing in investments, are you seeing anything else in just the last year or two in Japan, or what kind of recent things do you see now?
Well, I'm there. You'd asked, in our pre-session about the talent, and my gut has been telling me that I'm seeing better and better talent joining startups in Japan. But then, as I sat down and kind of tried to make a list, I'm not sure that that's true. because I kind of went back and said, well, you've had people like so-and-so, you've had people like Mikitana-san, you've had people like Namba-san. So you've always had a
people.
handful of exceptional startup leaders
Yeah.
in Japan. And I think as I look at the startups I'm watching or involved with, I'm still seeing, as compared to startups here, or what I assume is happening with these incredibly overfunded startups in China, is you have a very powerful bench, a very powerful leadership bench. You have talent of the same caliber as a Namba-san in 6 key positions in DNA, for example, if that were the case. Or someone like Oki, when starting Monex, instead of hiring students fresh out of college, or as Namba-san hired first-year employees at Oracle Japan, stole some bright young people that Oracle trained for a year, very young, inexperienced people to build out her management bench. The Japanese companies still tend to be very much dominated by the single founder as a group. There are exceptions. There are some founders who do a good job of hiring a management team, but the management team always tends to be junior in terms of age and experience to the founder. And it's very rare to have co-founders where ownership of the company is split equally between co-founders. So the Japanese startups tend to be very much dominated by, both in ownership and in leadership, by a single founder, and depend much more so than startups in the United States on the talent and ability to continue to lead and grow as a leader of the founder over the life. And I think that's
So
a
one of
factor
the
that's
things
different.
that I've noticed over the years, partly because of what you say, I think, is that the founder has such a kind of possessive sense of the company that the exit patterns in Japan are really different than they are in the U.S.
Yeah.
Do you have a kind of, what's your take on that side of the system?
Well, I think actually one of the, I'm not sure anymore if I think of it as an advantage or a disadvantage of the ecosystem in Japan, but a huge difference. It is still possible to take a small company public in Japan. And when I'm saying small, there are a number of companies that went public last year on a revenue base of $5 million. Now, they weren't internet-age startups that had $5 million in revenues and $50 million in losses, like was happening in America in 1999. These are $5 million companies making a little bit of profit and growing at maybe 20 or 30%. And it is amazing to me that the big underwriters like Nomura and Daiwa Securities and Mizuho Securities will actually engage these companies and go through the effort required to help them list as publicly traded companies. But of course, on that kind of revenue base, if an IPO is a one-time event, the amount of capital you could raise for a company that size is trivial. And so it provides a way to become public, to provide liquidity for the shareholders, to provide liquidity for the founder. Some founders see being public as a badge of honor, and so there's certainly a little bit of entrepreneurial pride associated with being publicly listed in Japan. And many companies list at 15 or 20 million in sales, and the only companies that get to 100 million or more in sales before going public in Japan are usually spin-offs of large, already established spin-offs of large companies. So it's very unusual for a company to stay private and grow to the size and scale with private financing, or to grow based on financing while still having a negative P&L, to use venture capital or private equity in its larger, more extensive form to continue growing the size of the organization, growing the impact in the economy, growing the size of the revenues on a money-losing basis from a PL point of view for as long as it can be done in the United States and China. So I think the lack of funding leads to issues around what salaries are paid to employees, the level of talent that you hire, how you evolve the management team over time, and how large the company ultimately grows.
So there's kind of a mystery in this small company going public pattern, because certainly the people here who would prevent that from happening are the venture capital investors.
Right. And in Japan, it's usually the venture capital investors that push it to happen. They have end of life issues. Venture capitals everywhere have end of life issues with their funds, and if a company is not ready to exit before the most influential investors are hitting their 10-year or extended 12-year deadlines on the life of their funds. In the U.S., they'll start working with those companies to push them to be acquired by someone, to do a trade sale so they can exit. Or, but where in Japan there's not as active a trade sale scene, and so one of two things happens. The early investors will ask for the founder to buy back their shares, or to assist in a one-off private placement, to find a buyer so the CEOs get asked to act as investment bankers on behalf of the early VCs by finding a corporate or some other investor who will actually take the shares off their hands, hopefully at a profit, sometimes at a loss. Or if the characters of the business are such that the leading VCs think that the securities firms could execute a successful IPO for it, they will push small companies to go public as a way to provide an exit for the investors.
So that's because the investors in the VC companies are expecting early return, but maybe not the big returns that we're looking for, the quote home runs.
Yeah.
Here.
So the whole ecosystem is such that investors there are more entrepreneurs than there is capital. There are more ideas and more businesses being formed than there is capital to support them. And so as a rule, for the bulk of the startup companies in Japan, investors can invest at a pretty reasonable valuation. And so if part of what's going on in Silicon Valley, China, is that the investments are so large and coming at such high valuations that there's a lot of pressure. You have to grow the business to match the size of the valuation the investors put in. And in Japan, because the businesses tend to be run more in the mentality of a small businessman, as opposed to what we would think of as a startup entrepreneur, they're run more like small businesses. If they're growing, if they're reaching a certain level of profitability and there's reasonable prospects for growth, and the investments were made on reasonable terms, a small IPO with a valuation of $20 or $30 or $40 million after the IPO is enough to make a reasonable return, not a home run return, but a positive return for the investors. And so there's the whole expectation around the average expectation around the returns to the founding team, the returns to the investors on a startup in Japan look more like you would think of as a small business operator, investing in small businesses in the States, maybe.
How do the big companies that are making strategic corporate venture capital investments fit into this picture?
What I'm seeing, there are two kind of classes of corporate venture capital firms in Japan. One is actually startups that have gone public, and there's an interesting phenomenon in Japan because the underwriters and the public markets are not comfortable valuing companies based on revenue growth if they're losing money. So there's a requirement that is rarely, it's 99% of the time, whatever the size of the company, they will be turning a profit, and they'll be expected to continue growing that profit after going public. But so if you're say 20 million in sales, you got $1 million in profits, you raise 5 or 10 million in your IPO. Say you raise 10 million in the IPO, and then you're producing $1 million in profits. And there are things you could do with your business to invest for more growth. You could maybe launch an international office, or develop a second product line. There are a lot of things you could do with $10 million if you're a small company still growing, to grow your own business. But the minute if you decide to spend that $10 million on a 2-year project to expand internationally, or a 2-year project to build a new product line, suddenly you've gone from producing $1 million in profit to $4 million in losses the next 2 years. And that's the kind of behavior that venture capital investors want to see. They want to see their money invested for growth, and it's the kind of behavior that public investors are uncomfortable with, because they see a company was making $1 million and suddenly it's losing a lot of money. Why? So what happened a lot.
I may want to sell my stock tomorrow instead of whenever there's a liquidity event.
That's right. You don't if your trading horizon for public investors tends to be shorter as well. Yeah. But what happened a lot in the 2000s and even recently still happens is that what they do with that money is, instead of just putting in the bank to earn no interest, or nowadays to pay interest to the bank, to leave it sitting in the bank in Japan, they will often use that money to start a small fund of their own and invest in other startups, hopefully somehow related to their business, maybe not, because they can do that as a balance sheet transaction. They don't have to take any loss on those investments for a few years at least, and if a couple of them pay off, they make an investment return, and if they don't pay off, at least they've done something with the capital they thought might be beneficial. So there's a strange phenomenon of newly listed startups investing in other startups in Japan. So that's sort of a category of it. And actually, I think often they make pretty savvy investments. They often make one or two pretty savvy investments because they're fresh out of a category, and people see them as mentors and are more willing to listen to their advice. So there's a good hands-on venture capital dynamic that happens a lot of times between the founder of a recently public startup and the smaller startups that they invest in. There's a whole other category of companies like Panasonic that have been doing CVC in Japan for ages, and KDDI and Docomo, who've both had funds now for quite a while, and NTT Group has several of the companies in NTT Group have funds, and Hitachi and others. And a good percentage of the CVC funds sitting in the large corporations are looking for technology plays in Silicon Valley. They're looking to find out what's going on in Silicon Valley. What's the new trend? Can we engage in a business relationship with a cool new startup in Silicon Valley by investing? So there's a lot of overseas investment. The exception, I think, has been the KDDI and NTT Docomo funds, who have invested more like Intel Capital does around the world in interesting mobile startups in Japan that they think can move the needle on their ARPU, on the subscriber base, offer interesting services to their mobile phone subscriber base that their competitors don't have. So there's the mobile phone CVCs in Japan tend to be much more interested in locking in relationships with interesting local or at least Asian regional mobile phone.
So the big companies play kind of a very difficult position if you think about it. They siphon off good talent, even if they're not getting all the good talent.
Yeah.
They are providing some funding into the venture capital scene.
Yeah.
What about B2B type situations? Do they buy from startup companies now? Is that changing?
Yeah, so that's a common question I get is, and a lot of Japanese startups will say, well, it should be great to be doing business in Japan because American companies will buy from startups and Japanese companies won't buy from startups. American companies won't buy from startups. Japanese companies don't buy from startups. They buy from a team that they learn to trust through an effective, usually long sales engagement. A product that they think is unique enough to be worth taking the risk on buying it from a startup. And so the dynamic, in my observation, I don't see a huge difference in the dynamic and the issues and the challenges of selling to an established company in selling a new startup's product to an established company in Japan versus the United States. It's the same. You have the same set of issues and challenges, and I know plenty of Japanese companies plenty of startups in Japan who have successfully sold to Japanese large corporations from very early in their history. And my favorite anecdote of this is there's a startup we invested in years ago called OK Wave. It's kind of Quora 5 years before Quora was launched. This is maybe the easiest way to understand it. But their business model was they developed, besides a public question and answer site, they developed a business model around helping companies develop their corporate FAQs for their call center customer support desks. So they had this software product. And the founder is just this extremely high energy, enthusiastic guy. He always shakes your hand with both hands, and you can't help getting all warm and loving him 3 minutes after meeting him. And he'd been trying to get big companies to buy his FAQ product, and he was in a meeting with some junior staff person at Sony one day and was told, well, we don't buy software from startups. And he had the brilliant insight, and like I said, it always comes down to sales and building a relationship and having a product that's worthwhile. And he says, well, wasn't Sony a startup once? How did you guys ever get off the ground? If nobody buys from startups, how did Sony get started? And it was just the right thing to say to the person. And he kind of said, yeah, I guess let's take a look. And over an engagement of a few weeks or months of proving the product could do what they wanted and what they said, and that, that moment of insight in a sales situation to kind of remind them of their roots was enough to many of the startups that we've worked with in Japan have lots of big corporate customers, but it takes time. And the first big company to buy a product from a startup, I like bow down and honor them, whether they're in the United States or Japan, because that the person in a big company who will take the risk on a startup because they like the CEO or the salesperson, or they think this might do enough to move the needle for their company that they're willing to make that bet. That individual in the big company that's willing to make that bet, whether it's in Japan or Silicon Valley,
Can I jump in with an
I find it
anecdote
awesome.
about
Yeah,
this?
sure,
Because,
sure.
So I was asked by NEC Corporation to run a panel discussion, a public forum, about the future of the microprocessor. And first of all, they managed to get President John Hennessy to come and be one of the panelists in this presentation. And because that was his work, and he had founded MIPS, and NEC was like his first customer.
Yeah, yeah.
So, I am told by the president's office, he's only got 10 minutes, make sure you let him talk first and then leave. And so I set it up. I gave him 10 minutes and kind of said, thanks very much. He stayed there for an hour and a half.
Wow.
I'm watching the people in the back of the room, on their telephones and rearranging his schedules.
Yeah.
All because they were his first big customer.
Yeah.
Yeah. So I know what you mean.
So it's hard.
That.
It's hard for a startup everywhere.
Yeah.
And I hear from startups in America how hard it is to get a big company to buy. And I hear from Japanese. What I don't hear American startups saying it would be so easy to sell this product to a Japanese big company. I wish I was starting up in Japan. But I hear that grass is greener on the other side of the ocean comment from Japanese entrepreneurs a lot more than I hear it here. But
so why does Japan have this terrible reputation? I think to a certain extent, Japanese people believe this terrible reputation.
Yeah.
If you look at the surveys that are done, very few people in Japan say that they see opportunities for entrepreneurs. There's a low percentage of the population involved in entrepreneurial activity.
Yeah.
Is it all just kind of mass depression?
I think part of it lies in Japan's strength in innovation in large corporations. So the world knows Toyota and Sony and Panasonic and there's a Nintendo, and there's a long history of awareness of how successful and innovative and globally influential the big Japanese companies are. So I think we come to the question of if you were asked to name a great company out of Japan, only people in private equity might think of saying SoftBank, top ahead. Anybody else is going to say Toyota or Panasonic or Sony or Nintendo or Studio Ghibli. And very few people top of mind would say Rakuten. Nobody outside Japan would say Monex. Nobody in Japan would say Monex. So if you think of like innovative leading Japanese companies, there are very innovative entrepreneurial companies, but our brand association with Japan is around the global Fortune 100 global innovative brands. You asked a little bit in one of the pre-session questions about hiring and employees, and it prompted me to see if I could find some data on what young people are thinking today. And there's a survey that a student group did of several hundred Japanese students asking whether they wanted to work for a startup or a large corporation upon graduation. And to be honest, I was surprised at how many said startup.
Really?
Yeah, so 3% of the students that were on the survey said strong preference to work for a startup. Not surprisingly, I should probably pull the data out. And 8% said, if all things being equal, a startup more than a big company. So startup only 3%, another 7%, probably a startup rather than a big company. And absolutely a big company was something like 30%, or maybe, no, it was 27%. 27% absolutely big company, 24% big company rather than a startup, and about 27% no real opinion. Any place that'll hire me, I'll work, was sort of the not surprisingly uncommitted Japanese sort of answer. Wherever I can get a job, I'll go work. But so I was surprised that 10% of students graduating from college expressed a preference to work in a startup. And I would be surprised if outside Silicon Valley in the United States, the preference for a startup as opposed to a big established company was much greater among American students than among Japanese students. I think globally there's some wonderful global brands, and it's a fairly unusual individual who has such a clear view of what they want to do with their life and what kind of experiences they want to get when they're young, that they choose a startup as the way that they want to learn and grow and express themselves, as opposed to an established large brand. So I would be surprised if the data was that dramatically different for American students than the Japanese students. So that was kind of surprising.
Yeah. So thanks to Alan's invitation, we both cooperate in putting on the JapanUS Innovation Awards each year. And last month, we just gave out the 2018 awards for Outstanding Innovation.
Yep.
And we had 2 U.S. companies that received the award, WeWork and Foghorn Systems, and 3 Japanese companies that received the award, Cloudian and Mujin, which does kind of like the control
Robot
box
software.
for robots, and Soracom, which is basically your own SIM card for an IoT system. One of the things you said at that time was that really you could stand these startups against a successful startup anywhere.
Yeah.
And it's really been kind of unusual. You haven't seen Japanese startups that you don't have to sort of make allowances for.
Yeah. So we've been doing this program for what's about 8 years now?
8 years now.
And I remember in the very early board meetings, we were just kind of designing the program. We wanted to have an award for emerging new leaders, an award for more established leading companies.
Changing the world. Yeah.
And we even tried to tease out something about innovation happening in big companies. And we could never find a big company in the United States that we knew that much detail about to award it on the U.S. But what we struggled with the first couple of years is we were saying, well, let's find companies that have been formed for maybe less than 5 or 10 years to do the emerging leader one, and maybe some companies that have just gone public or about to go public for this emerging one. And we kept finding that the later stage companies in Japan were not unreasonable peers to brand new companies in Silicon Valley. And we struggled to find equally young companies that were equally impressive in both markets. Or when they were a later stage also, still the gap at a later stage was also quite significant. So we sort of ended up blending it into one award, and we tolerated that we'd have more mature companies from Japan on stage with younger companies from the United States. And if you play the game that way, on stage the Japanese companies and the American companies look similarly innovative, similarly impressive. And so we kind of designed the program. So sharing the dirty laundry here about how we had to make this program work. This year was the first time in 8 years where I think all 3 of the Japanese companies on head-to-head competition, they're similar ages. All 3 of those are both technologically and in terms of the potential impact of the business in the larger economy more interesting than the companies often from Silicon Valley this year. And I didn't expect to see that. And so it was quite impressive to me to see 3 companies who gave great presentations in the English language, who knew how to talk about their business in a simple and compelling way, and where the underlying business was clearly game-changing for their customers. So that was sort of a setting early, and to come and speak here is like, well, if Japan has gotten to the point where the companies emerging in Japan are as good as some of the best emerging out of Silicon Valley, maybe we're in a new era in Japan. And sadly, I think where we are is there are now entrepreneurs, and there is an ecosystem of financiers around them that can now create Silicon Valley quality companies. I think if we were to look at quantity, We could probably not find more than one or two more in Japan of that same caliber today. We could probably find 30 or 40 or 50 more in Silicon Valley of the same caliber. So I think on a narrow selection of companies, the quality, a similar quality of companies are emerging in Japan.
The top handful.
But I think there's a larger quantity of similarly high quality. My guess there's a larger quantity of similarly high quality companies being formed in Silicon Valley.
Well, that would make sense. We invested $25 billion in venture capital last year, and so 10 times as much as in Japan at least.
Yeah. So one of my fun, somewhat cynical but somewhat serious remarks on how startup ecosystems work is you only get companies like Google or Uber or Salesforce.com or Facebook in a startup environment where you're willing to waste 90 to 95% of all the money invested. So I'm sure there's a lot of wasted capital going into startups in China. There's a lot of wasted capital going into startups in Japan, in California, and there's a little bit wasted in Japan as well. I was unfortunately on the board of a company that raised $40 million and kind of fell apart. There's lots of management conflicts and anyway, so not every deal in Japan works out either. But to get the really extraordinary, world-changing, incredibly quick growth to $1 billion in revenue phenomenon that you see in Silicon Valley and China now, you have to waste billions of dollars in deals that aren't going to pan out, or in copycat companies that are going to, not every company going after a space is going to win. There's going to be one winner and one or two, viable followers, and the other 10 or 20 companies that we're all trying to do the same thing are going to fail. And so part of the Silicon Valley ecosystem's success is driven by a willingness by the VCs and an astonishing willingness by the LPs that back those funds to waste an awful lot of money on the chance that you may hit on one Grand Slam home run.
Yeah, one time we had one of the partners from YC speak, and at that point, Y Combinator had 670-something companies go through their program. Yeah. 2/3 of their total capital gain over all the history of YC came from 3 companies.
Yeah, not surprising.
Out of the 670 whatever.
Yeah.
But Alan, what about other companies in Japan that you think are interesting that we ought to take a look at?
Well, there were the 3 this year. Of the three we saw in Japan this year, I thought Mujin was quite amazing. It's basically software to have an AI learning-based algorithm for how robot picking arms move. And so the movement looks more like a smooth human arm moving. There's a little bit of randomness to it, but it's sort of a goal-oriented, discover how the arm should move to accomplish a task. And they have actually implemented a 100% no humans touch anything distribution center for the biggest EC logistics company in China called JD Logistics, where various electronic goods come in shipments. They get unboxed, they get stocked, orders come in, they get pulled, stuck in bubble wrap, loaded up in boxes that are cut to size based on the contents of the box. And so basically from the time a truck arrives at the loading dock until boxes go out in another truck to be delivered, there is not a human involved in any step of the process from accepting, and it's because of, largely because of their AI-based robot control innovations of their software. So that was, to me, a really amazing, because I'm predisclosing my vote for the winner from Japan this year. But there will be other opinions, I'm sure. But for me, the company that is my favorite startup in Japan, the one that I'm watching and cheering and hoping it changes the world the way that it could, is a company called Spiber that I met about 8 years ago when there were 4 kids in the Keio University biotech grad school who had stumbled on the, go ahead.
Let me point out
yeah.
that this is not happening in Tokyo. This is happening in the thriving city of
Tsuruoka, little tiny town up on the northwest, so like an hour north of Niigata on the west coast of Japan. Nothing in the town but my wife's uncle's optometry clinic and Spiber. But
and Keio University's R&D Center for Biotech.
So I'm not sure how much of their story I can tell publicly versus what I can't. But what I know I can tell publicly is the original idea was to create bioengineered bacteria that could produce long strands of spider silk. And spider silk, you may not know, is one of the most durable, flexible, lightweight natural materials that exists. And DARPA has had projects they funded at DuPont to get goats to produce spider silk in goat milk and extract it from that. And so as a next generation after carbon fiber technology, there's been quite a bit of efforts to try and figure out how to mass produce spider silk artificially for a long time. And there are a few researchers in colleges around the world that are looking at analyzing the characteristics of spider protein and had bioengineered bacteria to produce spider silk in tiny quantities in order to do spectral analysis and genetic analysis and characteristic analysis of different breeds of spiders' silk. The idea that they hit on is, what if we could figure out a way, but in those processes they have to kill they produce a little bit of silk inside, destroy the bacteria to extract the silk fibers from inside the bacteria and do their analysis. Their thought was, what if we could figure out a way to have, and I've never been able to think of a more polite way to say it than, what if we could figure out how to get the bacteria to poop spider silk? And to basically consume nutrients and just keep producing, without dying, a long strand of spider silk. And then we could spin it and use bacteria to mass produce long strands of spider silk. And so that was the research project they embarked on as grad students. When I met them, and it was just the four of them, I said, you guys, you need to move to Silicon Valley to do this startup. You need Silicon Valley style funding, and more importantly, you will want the researchers at Wyoming University and the researchers in Germany who are doing research on spider silk characteristics to join your team. And you'll want great talent. And people will, if it's an idea as exciting as you're working on, and it's funded by a famous Silicon Valley venture capitalist, you will be able to recruit and retain the best talent in the world to work on an idea that's as big as this. And the idea is essentially replacing all kinds of metals, plastics. I think that I am allowed to say that they can produce any protein. You know, not surprising. It's not just spider silk. Any protein can be artificially gene sequenced and produced by these bacteria now. So any material that's protein based and other living thing based, which I'm not sure how specific I can get, but they can produce an awful lot of materials with genetically modified bacteria, and they have built a library of all kinds of gene sequenced and ready to do bacteria to produce a variety of materials. Well, they said, no, we want to JAFCO, we're going to raise some money from JAFCO. I said, no, don't take any money from JAFCO, because they will not let you move to Silicon Valley, and they'll push you to go public way earlier than you want to. And we're going to raise a couple $1 million in grant money from the Japanese government research labs that sponsor do research grants. So that's good. You know, it'll delay you getting serious about your business, but it's free money, so go ahead, do the grant. And I was not able to persuade them to come to Silicon Valley. And about 2 years ago, they were nominated by Forbes Japan to be, I think that year, the second most interesting startup in Japan. And when I was at the awards ceremony, I saw them sitting there, and I grabbed a seat in the honorees section just so I could sit next to Sekiyama-san, the president, and chat with him and get caught up. And he said, "Yeah, Alan, we've hired 3 people from overseas now." I said, "You guys, you're still in Tsuruoka?" "Yeah." And he said they had an article in Wired on what they were doing, and an Italian researcher had reached out to them and said, "I want to work for your company." And an Indian researcher had reached out to them and said, "I want to work for your company." And so they have in Tsuruoka, they now have, I think, 20 employees that are foreign nationals, don't speak a word of Japanese.
Out of about 150.
Out of about 150, yeah. Who are foreign nationals, don't speak any Japanese, and they have gotten the local city government to create a nursery school for the children of these foreign families. Anyway, so
Can I kick in on
the
that?
fact that they were able to raise $130 million in capital in Japan, almost no VC. It's almost all corporate money from their potential customers for the product. I don't know if I can name the company, but there is a major manufacturer in Japan with whom they're about to break ground on a. They finished the single production line scale testing.
Well,
they're about to do.
I can talk about
know how
one
much- you know how
that
much
they
they can say.
brought to here,
Okay.
right? Because we featured them in the awards
okay.
program a couple of years
Yeah,
ago. And what they brought was a jacket from North Face.
Yeah.
That their material had been integrated into the textile.
Yeah.
And delivered a much warmer, much lighter Arctic kind of jacket.
Yeah.
But the other thing that happened is Sekiyama-san, the president, brought his people over here to look at Bing Nursery because he was not going to leave Tsuruoka, but he was going to set up an international nursery school in Tsuruoka, Japan.
Yeah, that's cool.
Yeah.
So for me, this company, they're basically, the basic vision of the company is to replace all plastics and carbon fiber-based materials with a less expensive, more durable, and less brittle. So the problem with carbon fiber is it's brittle. Their spider thread based materials are bendable and flexible. So they have characteristics like metal in performance characteristics like metal, lighter, and so they are just about to break ground on a full scale production facility for their main sponsor, and what they've accomplished with 120 million in capital, which in Japan it's the most funded startup in Japan. On global standards, $126 million, you wouldn't even try to build yet another mobile photography app in Silicon Valley with $126 million. But they built a new materials company that has I think really the potential to replace an awful lot of petroleum-based products in a whole bunch of supply chains around the world. And they've done it in a tiny town in the middle of nowhere in western Japan. But anyway, so they're my favorite startup because they proved me wrong. They proved, or they haven't yet. They are step by step proving me wrong that you don't have to move to Silicon Valley to recruit world-class talent. You don't have to move to Silicon Valley to build a well-funded startup. And they may have been able to do it faster. They may still be able to grow faster in the future were they to get, billion-dollar financing rounds like something that starts from someone like Vision Capital or others. But they are my favorite startup to watch in Japan, just because everything they're accomplishing is like violates all of my assumptions about what's possible.
But would you say they're really exceptional, or do you think there's a lot of companies now that are starting to have that kind of possibility?
I think Spiber is exceptional. I think Spiber is unique in the world. I don't think any startup anywhere in the world will today or in the future accomplish as much as they've been able to accomplish with as little funding and just as much vision and passion and hard work as they have. So I think they are unique in the world. But I think there are a number of startups in Japan, like the guys from Muji, like Soracom. There are I think a larger number of startups in Japan undertaking serious materials, hardware, IoT. So one of the things that I think is interesting about Japan today is there's a lot of hype around AI. There are lots of great AI researchers in Japanese universities. IoT it's like the market where you want to apply it the most is Japan.
This kind of fits into what we were thinking about. Why should people pay attention to Japan?
The global hype themes. There's the global hype themes where Japan, a lot of work in robotics right now, and Japan is your ideal market to engage with manufacturers. So there's a lot of emerging hot categories in startup finance today where Japan has some as a market and as a talent base some organic, natural potential that I'm hopeful we'll see some global investors showing more interest. I'm hoping that at some point Son-san will get his vision team to look at opportunities in Japan, not just China and Silicon Valley, is that with $100 billion to invest, were they to engage effectively with a handful of excellent entrepreneurs in Japan, the funding and the local access to talent and stuff, SoftBank could make a big difference if they look inside the country, not just outside.
Okay. So why don't we take a few minutes and open the floor up to questions from you. You've been very quiet listening to us talk. Go ahead.
So, I feel, just based on my observations, Japan is the right place to start new companies, particularly in my fields. In my fields, there is more of advanced materials, nanotechnologies, devices, maybe some diagnostics. These hardware side companies, somewhat related to what you said right now.
Yeah.
Not many entrepreneurs, not many companies, so you don't have competition. So you can get a lot of cash from the government and corporates, and plus, I think the startup cost is pretty minimal because the payroll is over there is very small. And even the Stanford PhD quality guy is $40,000.
Yeah.
So it's very, very cheap. And also you can maintain sometimes 70%, 80% ownership as a founder. VCs over there are weak.
Yeah.
So then you can get to the public public traded companies within maybe 2 or 3 years.
Yeah.
You can
So
get,
let me turn that around into a question. Okay?
Oh, sorry, yeah.
Because I understand your point, and that's an interesting situation. You can flip that around and say, is Silicon Valley overpriced? Is Silicon Valley at the end of its road? Alan, what do you think?
I've thought that Silicon Valley was overpriced and full of waste for a long time, and yet I've thought that since the internet bubble, and somehow Silicon Valley continues to create just enough exceptional startups, and has such a powerful brand that money continues to flow here and continues to drive up real estate prices and cost of living for all of us. So I don't. I've stopped forecasting the end of Silicon Valley. However, China passed Japan as the #2 GDP a few years ago. It is within a year or two of passing the United States in venture capital investment. And so if I were a Chinese national studying at Stanford or Berkeley and thinking of starting a company, I would go home and start it at home, probably with a view to growing a business that has global potential. If I were a Japanese studying or active here in Silicon Valley, I would be tempted to stay here to do it because the ecosystem for starting the companies in Japan is not strong enough. I agree that there are all kinds of the cost of exceptional talent in Japan is extraordinary, and I'm surprised that more Silicon Valley companies and more Chinese companies aren't sourcing their engineering talent in Japan rather than India nowadays. I think that low wage is part of the problem. It's part of the reason, because Japanese startups tend to think of themselves as small businesses, and the VCs think of them as small businesses. The CEO shouldn't pay himself a lot. He shouldn't pay his employees a lot. You're a small business. You're not a big trading company. You're a small business. Pay the salaries of a small business. And I think part of the leadership bench problem could be solved if Japanese founders were willing to give up 30% of their ownership to employee stock options, and willing to give up another 30% to VCs to raise $30 million to pay a salary better than you can get at Mitsubishi. So if the salary to work at a hot startup was better than the salary you could get at Mitsubishi or at Sumitomo Bank or working for MIDI, you would see even better talent moving to the startup scene. So I think that the low salary of engineering talent is actually part of the problem that feeds into the smaller outcomes of startups in Japan. The fact that there are so many talented people who are willing to work for less, and there's a mentality of ventures being small businesses in Japan. But I think it limits the potential growth of a lot of the startups there. But you're absolutely right that it is especially for materials science or nanotech type companies, it'd be a great place to start a business.
Thank you. Takayama-san, I saw next. You first, okay? And then you, okay?
So recently government money is going to the startup ecosystem. For example, the 1 billion US dollar will be used for the market of the aerospace field, including the stimulating the startup company. So I would like to ask what aspect can be improved by investing from the governmental side, and also what aspect can be getting worse by investing from the governmental side?
The plus minus of government support.
Well, I think the government-based investing that I have the most direct visibility in is the NCJ activities for the last several years. So the first thing that happened is when they had $10 billion to invest, they couldn't imagine how to invest it in startups. So they spent a lot of money on big corporate projects and spin-offs and that kind of stuff. It was the first generation. In the second generation, they had only a small number of people who had experience investing in and helping the growth of young startups. So there's a lot of former consultants, a lot of former government officials who can think strategically, who can do MBA type analysis, and those skills are very, very good for private equity type business reformation, business enhancement. So taking an established business and improving it is a skill set that the consultant people hired by NCJ would be really good at. So for a large company, private equity type restructuring deal, the talent, and so the problem I see with the government funds is they tend to want to recruit really smart consultants because they think consultants understand business, understand growth, and consultants are sometimes the worst person you could apply to engaging a startup and helping a startup work through its issues, because it has to be much more, white sheet, free thinking, and it's much more about how deep you have to bow to get somebody to agree to buy your product, not how proudly you can go in and logically argue it. So I think there's a mismatch often between the type of people the government is comfortable hiring to run these funds and the backgrounds they look for versus the backgrounds and the kind of mentoring that startups really need. But that said, clearly the availability of that capital to fund startups and the mission, assigning the mission to look at startups, that will be probably the best source of waste that drives the ecosystem in Japan. So because the government would like to get its money back, but the government is not looking to make a big profit on its investments. And so on some level, they may be willing to take more risks than a private VC would in Japan. And certainly with that amount of money dedicated to space, they will make a lot of bets. A lot of them will not work out. Hopefully some of them do. So I think having that large amount of capital to invest in a well-defined category potentially creates enough volume of investment for Silicon Valley style waste or China style waste to kick in, and out of the many wasted deals emerge one or two really exceptional deals is what I sort of hope happens. I think the same thing is likely to happen with the Tokyo University $500 million fund and the Kyoto and Kansai $200 million funds. It's way too much money for a single university to invest in university-related startups. But if they actively invest that over a reasonable amount of time, there will be a handful of exceptional companies that come out of that and a lot of waste that hopefully the exceptional companies make up for the losses in total.
Thanks, Alan. Go ahead, Mel. Thank you.
Thank you. I'm curious about the typical mindset. Do people in Japan really love doing the startup? On the other hand, if you start a company, how easy is it to recruit the talents? Because we know even with this craziness for startup here, everyone still is fighting for the talents. And the reverse situation in Japan, would that be the more common case that people just don't want to consider joining the startup?
The people who do start companies are very enthusiastic about it. So you have to be passionate, excited about the idea, and sometimes the idea is brilliant, and sometimes it's crazy. I don't think the quality of the idea matters as much as how passionately the person wants to pursue it. And so there are plenty of entrepreneurs, plenty of people who are enthusiastic and passionate about starting companies. But certainly compared to Silicon Valley, there is not a wave of people waiting to jump from their last exit to their new startup. So the phenomenon you see in Silicon Valley, you build a company, sell it, 2 years after, the month after your golden handcuffs come off, jump to the next startup for your next equity play. So the equity upside hopping that is so common in Silicon Valley does not exist in Japan, largely because the typical stock option pool in Japan is 10% of the shares at the time of the IPO. They may have been set up once in the life, so there's no maintaining a pool of 20% over time and continuing to grant as you recruit over time. So there's not a continuous option pool, and so you don't see the drop off. So the people who tend to join the startup companies are friends of the founder, or people younger than the founder, or friends of the friends that he hired. So it tends to be in the early stages much more limited to people who know and trust and like the founder and want to help him. And those people tend to be junior in age and or talent to the founder. So you rarely see a phenomenon which is common in the Valley, that the founder is a tech geek who knows how to build the product, but he hires someone far more capable than himself to run the sales side of the business, far more capable than himself as CFO to run finance. And so over time, the quality of the leadership team in Silicon Valley tends to have each member even more capable than the founder in the roles that they perform. Whereas in Japan, you don't see teams where the team is more talented than the founder.
Okay,
So,
thank you.
yeah.
Go ahead.
I've always been curious, and I was wondering your thoughts on how the aging population and negative population growth influences the overall startup ecosystem and just growth of businesses in Japan.
One way that it influences, you see probably more startups whose focus as a business is solving some aspect of the aging population problem. So I think there's probably a larger percentage of startups looking at and thinking about how does society function as it ages. I'm not sure how strongly they're correlated, but discussion in the government about the problem of the aging population and how this is going to impact big companies and the economy's ability to function as a whole were happening in parallel with the conversations about we need to get more startups going, we need to get more new companies forming and growing. And so I think at some level as a policy issue as well, a vibrant startup ecosystem is seen as part of the solution to the potential decline of established companies as their founders and founding teams move on. And there's one other phenomenon, I don't know how common it is in the United States, but there's a phenomenon in Japan of children inheriting their father's business, taking the cash flow around the original business and turning that into a completely new business, sometimes getting outside financing. So there is a form of entrepreneurship funded by the cash flow of the business inherited from my father that is not uncommon in Japan as well.
Thank you. Go ahead.
So I want to take the question back to the issue of funding. What would you say? What would you attribute to the disparity between like the startup culture and the funding scene between China and Japan? Because I think on a very superficial level, they seem to have very similar ideas of like conformity and community as opposed to like individualism.
Yeah. So from the moment I started to notice that the Indian startup scene and the Chinese startup scene looked like they were starting to take off in about 2006 or so. Some of the Silicon Valley firms were flying over to do investing. There were some local firms being formed. I attributed it then, and I think I still do now, to the world geopolitics and world economy situation of the 1980s. And what was happening in the 1980s, America was struggling with recession, and Japan was #1, and Americans of my generation were taking Japanese in college and going to learn how to operate American businesses the way Japanese business operated. With their, the popular media of the time, there were lots of Hollywood movies in the 1980s where Los Angeles streets are all in kanji and they're famous Japanese brands all over Times Square, and so the worldview of the 1980s was Japan is #1, Japan is going to dominate, America is in the decline, and Japan is on the emergent. And so if you're a young kid just graduating from college in Japan in the 1980s, of course you want to work for Mitsubishi or Sony or Panasonic, because your country, those companies are going to dominate the world. And America thought the same thing at the time. So American students of my generation, really smart, because we're going to work for Sony and Nintendo and Toyota and Honda. So there was a wave of young, talented American people wanting to work for Japanese companies. For whatever reasons, whether it's language or residual hard feelings about World War II, a lot of the really talented Chinese who were being permitted to study abroad on visas in the 1980s, and a lot of the Indians, a lot of the Chinese grad students, Indian grad students came to Silicon Valley or came to the United States and ended up working in junior staff positions in Silicon Valley startups in the 1980s, or Microsoft, or Oracle, or Apple, or Sun Microsystems. And so there was this generational wave of the best and brightest of Japan's young people joining Japanese companies that were going to lead the world, and not getting exposed to Silicon Valley culture as young people, and growing through the ranks and learning how Silicon Valley companies were, learning how to manage a Silicon Valley style company, and a generation of Indians and Chinese who were going through that experience. And so as the 1990s came to an end, and America had recovered and had the internet bubble, and Japan had kind of gone into flat growth decline, and Japanese were kind of rethinking, well, what is lifetime employment? Is there such a thing as lifetime employment anyway? What's our future as young people like? By that time, there were lots of Chinese Indians that had 10, 15 years experience in management in Silicon Valley, and who had retained connections with family and friends back in their home country, and who saw that China was now on an emergent economic path, and India was on an emergent economic path. And so there was this generation of well-trained, well-connected, Silicon Valley savvy, young potential entrepreneurs, many of whom chose to move back to China, back to India, and apply what they had experienced in Silicon Valley. And Japan did not have that generation at the time when it might have most wanted to have it. So I attribute a lot of that difference to just the ongoing impact, the ongoing effects of how the world, those key economies of the world were interacting with each other in the 1980s.
That kind of lost generation theory is a very interesting point to close our formal session on, because we're out of time. We've got some refreshments outside. Please join me outside in talking more with Alan informally about his ideas on this and other things that we've talked about today. Alan, thank you so much.
Thank you.
Great session.
Great questions.